Hey traders, welcome back to this week's weekly Forex forecast. Last week we did start to see the US dollar continue to turn down. So we were looking in last week's video at the fact that it does look like we're getting a bigger top playing out in euro dollar, even though the overall trend in euro dollar is still to the upside. And at the same time, we did see as some of these markets pulled back against the dollar, you know, some of them tested their lower bounds like pound dollar and bounce. So you could have stepped in and bought pound dollar and it probably would have been a successful trade on Friday, because even though we had an inside day, we did have an up day on Friday. But there were other US dollar pairs last week like USD-CAD, whereas if you had stepped in and shorted USD-CAD from the upper bound, the first upper bound, it did actually go to its second upper bound, the gold level. So this was kind of why last week I was saying to you guys, look, it looks like we're getting a bigger reversal in the dollar. You know, it is technically still a buy, but it does come with some risks, you know, if we're going to get a bigger reversal, and, you know, depending on which pair you trade, could be a bit hit and miss. So coming into this week, I do actually favor US dollar long setups and also euro long setups. So when we go through the portfolio selection in a minute and we look at the best currencies to the long side and the short side, you will see that both the euro and the US dollar are two of the currencies I want to be on the long side of this week. So what does that mean? If you've got two currencies in euro dollar, which are both technically buys heading into next week, it means that, you know, this could go down. And in fact, I anticipate this coming down to the 1.1599, which is the lower bound. But as this sells off to the downside next week, if we get some downside as I'm anticipating, there are going to be other currency pairs which are going to be better to trade than euro dollar to the downside. Because if euro dollar does come down, it should come down at a slower rate than something like New Zealand dollar, which I really do want to be looking for short opportunities in next week. And when we go through the markets, you'll see that is one of my top short ideas heading into next week, New Zealand dollar to the downside. So if I zoom in here on euro dollar, coming into this week, because euro dollar is two long currencies, or two currencies have a long bias on, then you can actually short this. You can range trade it. You can short it if we get to the upper bound, and if it comes down, you can buy it. So what I think we're going to see, you can see we've got this breakdown, we've got this momentum sell-off, and we're below the 30-period moving average. It does actually look like euro dollar is going to, because we're getting this kind of bear flag pullback, consolidate into the moving average. And I think there's a very good chance you get that initial breakdown pretty much straight out of the gate down to the 1.15990. So the key level next week to look for is this 1.15744, because this is the low that sits. It's the first significant low that sits in the buy zone. So the buy zone is just where this market turns oversold during the week. And then next weekend, of course, as many of you know, the levels will update. And the sell zone is where an asset that we're looking at in today's video turns overbought during the week. So ideally, what we're looking to do is weak markets, we're looking to short in the sell zone if they pull back, and strong markets, we're looking to buy dips in the buy zone during the week as they pull back. So euro dollar, because it's a kind of, you know, long versus long currency, you can look at this either to the downside or the short side. I think because we're looking at a bigger reversal potentially, and this is backed up by, I was talking on Twitter or posting on Twitter about gold being overextended, which although it's still a buy, does signify incoming dollar strength. The US dollar Japanese yen is setting up for a bigger breakout, which I also posted on Twitter, etc. So there are a number of signs to say that the US dollar is in a much bigger bottoming process. So on balance, you know, I'd prefer short opportunities next week. So if we do turn overbought, which is above the 1.18028, this is the significant double top high. The 1.18306 is where we peaked, we pulled back, and now we've breached and pulled back. So if we do pull back, the 1.18306 would be that kind of right shoulder setup, right? We pushed up, we pulled back, we broke through it, which is here. We pull back, and then we retest the left shoulder. That's up here at the 1.18306. So coming into next week, the two things I'll be looking for is this. First and foremost, I would look for euro dollar to pull back, nestle into the 30-period moving average, and then look for that counter trend break, because you've got a strong break down here with momentum. So this kind of sell-off down to the lower bound, which then becomes a profit-taking zone, as many of you know, because if you're short, you know, and you buy back in the buy zone, you're booking your profits on your short. So that's what I anticipate happening. If we start to break through, so there's two things here. Reactively, if we pull back to the 30-period moving average, and instead of breaking the counter trend, so look for it to pull back, test the 30 period moving average, and then break the counter trend to the downside. If it fails to break, if it just continues to bounce and it goes through, so you're watching for a break, you're watching for a break, you're watching for a break, it doesn't break and it goes straight through, the second place, assuming there's no counter trend break here, the second place then would be above the 1.18028 and a test of the 1.8306 for a short opportunity. So those are the two things I'm going to be looking for personally next week. And this, especially when we get into the sell zone, I mean, if we can pull back and test the right shoulder, this is the kind of setup that I'm looking at every single day in real time with GMT members, and we track all the results. You know, with a winning trade, you'll see it's a winning trade, and if I have a losing trade, that's also posted and recorded. So that's what I'm going to be looking for in euro dollar next week. They're actually both currencies I'm looking at to the long side, so I think there are actually better markets next week to trade over and above euro dollar, and we're going to be looking at those in today's video as well. Okay, so moving on to the portfolio selection, and you know, as always, we're looking for the 3 top currencies to the long side that we want to be buying, and the 3 top currencies to the short side, or the 3 currencies we want to be selling primarily. And you know, to the short side, if we start with the short side, it's pretty obvious. We've got the Japanese yen, the New Zealand dollar, and the Canadian dollar, which are the 3 top shorts heading into next week. Both of these are weak on an absolute level and getting weaker. And to the long side, the obvious ones are the euro and the Swiss franc. They're strong and they're getting stronger quantitatively in the hedge dash platform. So that really leaves one other to the long side. You know, do we want to be long the Australian dollar, which has been benefiting from a higher gold price and also, you know, benefits when you kind of see commodities going up and inflation? Or do we want to be long the US dollar? I would prefer personally next week the US dollar. We also have the RBA coming out on Tuesday. So the Australian dollar will be subject to that interest rate decision. So on balance, I'd prefer to preference the US dollar to the long side next week. So to summarize that then, what I'm going to be looking for primarily at the top of my watch list next week, and also what we're going to be looking at in today's video, is euro yen to the upside, franc yen to the upside, US dollar yen to the upside. We're also going to be looking at euro New Zealand to the upside, New Zealand franc to the downside, and New Zealand dollar to the downside, which I really like. And we're also going to be looking at EurCad to the upside, CAD franc to the downside, and US dollar CAD to the upside, which actually took out its second weekly upper bounce. It took out the gold level last week, which means we've got abnormal momentum to the upside, which means we most likely have a new trend reversal to the upside in US dollar CAD. So I'm very interested in those next week. You can also look at, you know, euro pound to the upside, pound franc to the downside, and also pound dollar to the downside. The other thing I want to highlight here is, first and foremost, the New Zealand dollar is oversold on a rolling daily basis, which means that most likely it needs to bounce for 1 or 2 days. So if you are looking at New Zealand dollar shorts, I would anticipate the pullback first. You know, intra-week trading could actually see this. If you start to short it on the open, you could see it actually pull back Monday, Tuesday into Wednesday first. So just bear that in mind if you are trading the New Zealand pairs, and you know, we'll bear that in mind when we look at the New Zealand pairs shortly. But the other thing which is really important to look at here is the fact that the Japanese yen is the #1 short going into next week. So as we see strength coming into the US dollar, we are seeing a weakness in the Japanese yen. Now this is really significant, because what this is telling us is the US dollar is not going up because of fears around growth. So we do have non-farm payrolls coming out next week as well on Friday. You know, just bear that in mind. It is non-farm payrolls week, and we've seen very, very weak jobs data. However, the US dollar is not going up on a potential growth scare, because if that were the case, you would see the Japanese yen also starting to outperform quantitatively. So when you get a flight to safety and risk off, the Swiss franc goes up, the US dollar goes up, and the yen goes up. When you get inflation concerns, the US dollar goes up and the Japanese yen goes down. So what we're seeing here is we're seeing markets positioning, and we're seeing a concern around a re-acceleration of inflation, not a potential recession. Now that could change, but certainly for the time being, the markets are actually more concerned with the re-acceleration of inflation. And we just got very, very strong GDP data out, of course, last week out of the US, which confirms exactly the positioning we're seeing here in Forex. Okay, so kicking off the watch list with crude oil, and crude oil is still a short or do nothing. It's actually been kind of moving sideways, not doing too much. However, there's a specific setup that I'm going to be looking at next week. The first thing you can notice is we are actually starting to bottom out a bit, and we have this kind of double bottom pattern. We failed this breakout to the downside, and we only just tested the confirmation breakout here. We haven't actually traded above it. But usually with double bottoms, double tops, you tend to get a one-to-one price target. So you take the breakout point, in this case, the low of the double bottom or the high of the double top, and you project that to the upside. And that's where you tend to get a profit target for that pattern. So what I want to see next week, bear in mind this is a short or do nothing, a one-to-one profit target takes us actually roughly to the prior high at the 70.50. So what I'm going to be looking for is for crude oil to push up, enter the sell zone next week above the 68.92, trade into the 70.50, and what I suspect is a combination of new people stepping in and shorting at this high and buyers covering their long positions, in other words selling, once we take out this high over here because of this one-to-one profit objective on the double bottom. This is where I anticipate a failed breakout next week, and I'm going to be looking for the market to liquidate to the downside for about 1 or 2 days. That's the specific setup I'm going to be looking for next week in real time with GMT members. The only other thing I would say is if we are going to get this double bottom breakout, even if we fail at this high initially for 1 or 2 days, we could very well break through over the next few weeks. And if we're going to get a breakout above the 70.50 and a bigger move up in crude oil, what is that going to be? Inflationary. As crude oil goes up because of its utility in the global economy, of course, that's going to drive prices higher across the board. So perhaps this kind of near-term double bottom and a bigger move up in crude oil over the back end of the year, perhaps this is what the Forex market's already sniffing out and why we're seeing the US dollar starting to go up with the Japanese yen still weak. In other words, an inflationary type of regime kind of positioning into Forex. Okay, so moving on to the Euro pairs, starting with Euro Yen. Now, Euro Yen is a long or do nothing for me. I cannot short this market next week. The one thing I don't like about Euro Yen going into next week is currently, you can see we're above the 30-period moving average, but we're really grinding. Look at the way this is just grinding. And, you know, this is not great price action to step in because when you get a kind of grinding market, it tends to either explode higher or explode lower. So what I would personally like to see next week is this. I would like to see Euro Yen actually pull back, enter the buy zone, so it turns oversold during the week below the 173.32. And then reactively, I'm going to be looking for sellers to attempt to push the market through these lows over here, these nice 4-hour lows. As sellers attempt to push through, so they're attempting a breakout to the downside in a market which is overall bullish and is also oversold during the week, this is where I'm going to anticipate a failed breakout and look for that liquidation back inside the range. So that's what I'm going to be looking for next week in Euro Yen. If it does pull back, but it doesn't get all the way there, let's say it crosses the moving average, then you can also look for the counter trend breakout. You know, if it breaks out again before pulling all the way back, moving average follows it, and you get that kind of push up into the moving average and then move away. You can look for that bull flag setup. The profit taking target for any intra-week longs is the 176.59. Next is Euro New Zealand. This is a buy or do nothing for me. This market is overstretched to the upside over prior weeks. We know this as well because we just looked at the quantitative data in the New Zealand dollar when we looked at the portfolio selection, and the New Zealand dollar is oversold on a rolling daily basis. This is actually overbought on a rolling daily basis. So if you step in this area, there is a good chance that this ends up pulling back. So if you buy up here around by the open, there's a very good chance this pulls back for a day or two. So what I would personally like to see is I'd like to see Euro New Zealand pull back first before I attempt to get involved. I'd ideally like to see it pull back, retest this kind of prior high over here and this low over here, and enter the buy zone at the 2.00896. This is where I'm going to be looking below this low and this high, this kind of area here. This is where I'm going to be looking for double bottoms, inverse head and shoulder patterns. We're going to be looking for a 1 or 2 day bounce to the upside. If we do pull back, we break the moving average, we start to make our way down, and then we re-break the moving average before taking out the lower bound. That's where you get your kind of bull flag set up, because what's happened there is it started to correct at the start of the week, and then you get a counter trend breakout before you take out the lower bound. That's where the market rallies, the moving average follows it, and you get that break of the moving average, your first kind of pullback or consolidation and a move away. So that kind of bull flag setup with the profit target at the 2.04474. We turn extremely oversold in this market at the 1.99107. Don't anticipate it coming down to there because we're already kind of overextended to the upside. So any pullback is actually likely to be shallow. This is quite a strong market. But I can only be long Euro New Zealand next week or do nothing. Cannot sell this market next week. And the final Euro pair is EurCad before we move on to the franc pairs. EurCad is a buy or do nothing. We're actually kind of ranging. You see, we came up towards this high here and then we kind of sold off. We bounced last week. We actually took out the weekly upper bound and sold off from the weekly upper bound last week. So I'd like to see this come back down next week, test the bottom of the range, which is right here at 1.61661. And then I'm going to be looking for a bounce from the range bottom and also from the buy zone. So we turn oversold next week below the 1.6194, which increases the odds of a bounce during the week. And at the same time, we run into that kind of range bottom at the 1.61661. So this is where I'm going to be looking for a failed breakout to the downside. And why do I look at these kind of failed breakouts? Because one of the strongest patterns you can find in markets, especially Forex, but really any markets, is when a market pushes into something, attempts a breakout, and it fails, all of those people pull their positions. You can get a strong liquidation. You know, this is where you can get a significant payoff if you get that kind of failed breakout. So a lot of time is spent trying to identify where failed breakouts are going to occur. And so that's where I'm going to be looking at it next week at the 1.61661. I'm going to be looking for 1 or 2 days worth of liquidation back inside the range. If we start to pull back, you know, I'm not sure I would necessarily want to trade an intra-week one here because the moving average, you can see it's kind of flattening out. So that means we're going into a range. You know, when the moving average is up, you know, and you kind of pull back, you're kind of trending to the upside. When the moving average turns flat like this, it means you're going into a ranging environment. So I would prefer to look for a trade from the range bottom. That's the primary setup I'm going to be looking at in real time with GMT members next week. We turn extremely oversold at the 1.60764. Don't expect it to get here, generally speaking, but worth having these gold levels on your chart in case, you know, in the event we do get there. Last week, for example, we did get to the second upper bound in US dollar CAD. So if you get to these gold levels, what that means is you've had significant momentum in one direction or the other, and the trend is likely to continue in that direction. One of the reasons why I'm very interested in US dollar CAD to the long side this week. Okay, so moving on to the franc pairs, started with franc yen. Franc yen is a buy or do nothing for me next week. And as you can see, we're trending to the upside. I would like to see this pull back first. And again, you know, really looking for two things. We're pulling back to the moving average. And then once we start to hit the moving average, you know, you can start to draw a counter trend line on. Right? If you're drawing your counter trend line on and you're not breaking, then what I'm looking for is I'm looking for this to come down, breach the 185.66, and also in this case, take out this 4-hour low right here. This is where I'm going to be looking on the dip for a 1 or 2 day bounce to the upside next week in franc yen. And if you start to break out, you get a fast market. So instead of actually pulling all the way back down to the lower bound, you start to break out during the week. And usually the moving average, you know, goes above it like that. You correct, and then it starts to follow it like this. That kind of pull back into the moving average and move away. That's the kind of bull flag setup you can look for. And the profit taking target is the 189.02. So in either scenario, I can either be a buyer or do nothing in franc yen next week. Selling this market is not an option for me. Next is New Zealand franc. Now I've started zoomed out, so you can see we are actually channeling to the downside here. And if I zoom in, you can see that, again, you know, this is a market that is a sell or do nothing for me next week. I cannot buy this market. So what I like to see is pulling back, testing at least or breaching the moving average. And again, this is where you can start to put your trend line on. So if you get this kind of counter trend move to start the week, a breach of the 0.46491, which is a prior high over here, and is exactly where we entered the sell zone. You've also got the significant low over here, so somewhere in this area. This is the kind of area I'm going to be looking for a 1 or 2 day reversal to the downside next week in New Zealand franc. And again, if you get a fast market, so you break the moving average and you start to counter trend move back towards the upper bound, but instead of testing it, it kind of stalls out and then breaks down. So you get the counter trend break like this. You know, this took a little bit longer, but you can see this pushed up, perhaps didn't take out the upper bound, and then you get the break and the follow through to the downside. Breaks below the moving average, consolidates, sells off, consolidates, sells off. So that's what I'm going to be looking for next week in New Zealand franc. I can either be short or do nothing. The profit taking target to the downside is 0.45588. And, you know, we could very well blast through this and hit the bottom of the channel. But anywhere below the 0.45588 would be a good place to book profits on any intra-week shorts in New Zealand franc next week. And the final franc pair is CAD franc. So this is a market I can be either short or do nothing in. And what I like about this is notice how the moving average, instead of kind of counter trend moving in the opposite direction to the overall trend like this, we're actually starting to flatten out. Notice how we're actually kind of going sideways. Yes, we're coming down a little bit. We're going kind of more sideways than backwards. So what that tells me is we are actually in a little bit of a range, and you can just simply take the low from the moving average and the high, and you can kind of establish your range here. So what I really like about this is if we start to pull back next week, we breach the upper bound at the 0.57636. This is where we turn overbought during the week in a market I'm looking to be short. And if we push through and hit the range high, this also will take us back into the top of the channel. So this would be a fantastic place next week because we have that kind of trifecta of being in the sell zone, hitting horizontal resistance, and then hitting a descending kind of channel here as resistance. This would be a great place next week to look for a 1 or 2 day reversal back inside the range. You know, you could intra-week trade this. It's already kind of starting to roll over. So perhaps, you know, what you've got here is a kind of almost a pennant pattern. Perhaps if it continues down and breaks this low, you know, you could look for the moving average to follow it, and then you'd have your bear flag down here instead. Profit taking target to the downside is 0.56682. But this right here is the preference for next week. If we can get this as a setup, and of course, not every single market is going to set up. You know, you look at a plethora of markets and you plan in a number of markets, and you want to really get, you know, maybe 3 really good setups a week. But this would be the ideal setup next week in CAD franc. Either way, I can only be short or do nothing. I cannot initiate long positions in CAD franc next week. Okay, so wrapping up the Forex universe with the dollar pairs before we move on to gold and silver. And look at US dollar yen. This is a massive pattern which is setting up to the upside. 1, 2, and the third touch of this trend line. This high over here, if we take this high out, we could see this thing explode to the upside. So if you wanted to look for a bigger trade, I know we're looking really, you know, for a 1 to 2 day opportunity each week. Occasionally you do get these massive setups. If you can get involved in US dollar yen and hold it somewhere early for the break of this high, you could very well see it break this high with extreme momentum, a big breakout, as all of those stop losses would be covered. So that would initiate a much bigger move up. So, you know, ideally, instead of getting on a bigger breakout, you want to try and position in before the breakout. So when it hits it, you know, if there's a bit of volatility, you actually, you know, get involved down here somewhere. You can set your stop loss to break even as it breaks out. And then, you know, if there's volatility, you can just hold a break even for it to go. So looking at this as a big pattern, I'm just wanting to highlight for that you heading into next week. But this is what it looks like on the 4-hour time frame if we zoom in a little bit. So we do have a prior low down here in the buy zone. So ideally, if we could come down and take out the 147.45, that would be a great place to look for a 1 or 2 day reversal. However, as we start to counter trend trade back down towards here, because we've got such a big breakout here, I would not be surprised to see this come in, test the moving average, nestle into it, maybe break slightly below it, and then actually start to break out intra-week for that kind of bull flag setup. Into the profit taking zone at the 151.17. And of course, you know, the moving average probably do something like this as well. But if you book your profits to 151.17, just bear in mind, you're not necessarily giving it a chance to really explode through the prior high. So you could book profits here, but if we break this high, you've got a technical breakout. This could very easily go to the second upper bound with such a big pattern. You could expect a lot of volatility. So that's what I'd like to see in US dollar yen next week. If we do, you know, attempt to break the counter trend move and we fail and we fail and we fail, the buy the dip would be below the 147.72 and ideally the 147.45, which is this low right here. This is where I'd be looking for a 1 or 2 day reversal back inside the range. And then next week, I'd expect a little bit of a correction and then an attempt at the major breakout of the high. Either way, I absolutely do not, under any circumstances, want to short this market. I can only look for long setups next week in US dollar yen. Next is New Zealand dollar. I can either be short or do nothing in this market. Remember what we looked at the beginning of the video, the quantitative data showing the New Zealand dollar as an individual currency is oversold on a rolling daily basis. On a rolling daily basis, it means it needs to pause for a couple of days, maybe 1 to 3 days. If it's overbought or oversold on a rolling weekly basis, usually needs to pause for 1 or 2 weeks. And if it's overbought or oversold on a rolling monthly basis, it needs to pause for, 1 to 3 months, etc., etc. So that's what we're seeing in gold, by the way. Gold is overbought on a rolling monthly basis, so it likely needs to correct for a few months. And if that's the case, again, that implies dollar strength. But in terms of New Zealand dollar, what I'd like to see is I'd like to see this pull back first. If you get short here, this could very easily bounce at the beginning of the week because it needs to pause for 1 or 2 or 3 days. Right? It could have another down day, but even if it has another down day, it probably is still going to pull back for 1 or 2 days. So I would like to see this pull back first. You can see the moving average actually sits right at the weekly upper bound, and we've got the prior to lows over here, which we've broken through, and we have a 4-hour high right here. So I'd really like to see this pull back, breach maybe even the moving average slightly and trade into this area between the 0.5820 and the 0.5835. This is the zone I'm going to be looking for a potential short position, so a failed breakout to the upside. I'm going to be looking for that 1 or 2 day reversal. So again, you can put your counter trend line on like this and looking for either it to break out. If you get a fast market and it breaks out before that, you can look for your bear flag setup into the profit taking zone at 0.5689. Or if we just hold the counter trend move all the way back, the kind of sell the rip opportunity would be up at the, let's say the 0.5835, because this is where we have the prior low and the prior high sitting right here. So this would be my preference in this area here. Either way, I can only be short New Zealand dollar or do nothing next week. Cannot buy this. I do think we're going to see a significant amount of downside in New Zealand dollar over the back end of this year. So I really like New Zealand dollar shorts next week. And I think we're going to see multiple weeks where we get downside in New Zealand dollar and the opportunity to short it. And the final dollar pair before moving on to gold and silver is US dollar CAD. US dollar CAD took out its second upper bound last week. It took out its first upper bound, and I said to members, look, don't short this. Let's just leave this. Let's just sidestep this because it looks like we're actually starting to get some directional moves here, some trend changes. And you can see US dollar CAD was kind of chopping around, moving sideways. Look at the moving average, just kind of oscillating. And then we hit the second weekly upper bound, so the gold level last week. So what does that tell you? It means abnormal momentum. So essentially, quantitatively, we can quantify that abnormal momentum as the start of a potential new trend. So what I want to see is I want to see US dollar CAD pulling back. I want to see it start to counter trend trade first. That's the ideal thing to start the week. And if we can counter trend trade all the way back to the buy zone, which is the 1.38602, and there's a nice prior high over here. There's no real low until we get here. And because this is below halfway in the buy zone, it's a little bit too far down. So this would be the high right here I'd be looking for. A failed break back down below this high. And that's where I'd be looking for that bounce for 1 or 2 days up. If it does bounce out, it'll probably continue for a couple of weeks. But that 2-day bounce and then a pause correction and then probably into the weekly upper bound the following week. But if you start to get a fast market, in other words, you start to counter trend trade back down towards this high, and before you get there, before you turn oversold, the market re-breaks, and of course the moving average, will probably follow it like this. That's when you're going to get the bull flag set up into the upper bound at the 1.40238. So either way, I can either be long or do nothing in US dollar CAD next week. Shorting this market is not an option for me, and it does look like we are just about to start a new trend to the upside based on the fact we had that abnormal momentum to the upside last week in this market. Okay, so wrapping up the video with gold and silver, I personally think we're coming towards a major top in gold. Now, that doesn't mean go out and sell gold. That could just simply mean if you're long gold from 2,500 that you might want to book some profits, right? So it doesn't necessarily mean you want to short gold. In fact, I'm still looking only for long setups in gold for now. I'm not a huge fan of shorting gold anyway, but if I am going to, I'd like to see gold down, a lot more than it currently is. and the dollar probably needs to be a lot stronger. The dollar is only just starting to attempt a significant bottom. It isn't actually very, very strong yet. It's attempting to, you know, make a new trend to the upside. So until that happens, I still would favor long positions in gold. I'd like to see gold pull back and enter the buy zone, which is below the 3692.99. There aren't any really significant lows down here, so I'd like to see it make its own support. So essentially push down and then kind of double bottom or inverse head and shoulders. This is where I'll be looking for a 1 or 2 day reversal to the upside. If we start to pull down, you can see we've got a little bit of a double top up here. If we start to pull back, you can put your counter trend line on, and this would be where you could start to look for a break before taking out the lower bound. So again, the moving average would follow it, and then it would cross, and the moving average would follow it back up. That's where you get your kind of counter trend line breakout during the week, and that's your bull flag set up in the 4-hour chart into the 386212. Either way, I can only be long gold next week for the moment at least, and probably for, you know, the foreseeable future. I can only be long gold, I cannot short gold. And finally, we have silver. Now, very similar to gold, I do think if we're going to get a significant dollar bottom, then we are going to see a top in gold and silver. But still for now, and this actually is quite interesting, this actually has characteristics of a bit of a blow off top. You see how we kind of push high, and then we straight line. I don't know if it is a blow off top, and at least for now, I would still rather buy silver on the dip. So again, until we really start to see the US dollar appreciating with significance, at the moment it's just bottoming, then I would still like to be on the long side of silver. So any pullback next week, I'm going to be looking for a counter trend move towards the buy zone, which is at the 43.83. There are some really nice 4-hour lows just here as well. So if we pull back, these are the lows I'm going to be looking for a failed breakout to the downside and a bounce for 1 or 2 days to the upside. And as we start to counter trend trade next week, and again, it may push a bit higher first and then counter trend trade, you know, I'd be looking for the pullback. And if you get the breakout before taking out the buy zone, that's when the moving average follows it up, and you can look for that counter trend bull flag set up into the profit taking zone in silver next week at 48.25. Either way, I can only be long silver. I can only buy silver or initiate long positions in silver. I cannot short silver next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.